Hello, folks. Welcome to Market Trends. I'm David Russell, Global Head of Market Strategy at TradeStation. I want to quickly start out with a few quick disclosures. Great to see everyone as usual. And we are going to take a look at some things at the level of kind of individual stocks and some of the news stories on Monday. We do state of the market when we look at the, what's happening in terms of the indexes and the sectors. And now we are showing, we're going to look more individual names and some of the individual trends that are happening. Those are my disclosures. If you want to see, here are the standardized returns. I'm going to share with you right here some disclosures, including a link to the prospectuses of some of these ETFs now in that chat. Okay. It was great to be with everyone. So remember, if you go to tradestation.com and then you click on Insights, this will take you to an article. And the article here will give you this blog post. We changed the look of some of these things. It's the same thing, just looks different. This is our rundown for today. Some of the key things we're talking about. The key things we're going to kind of cover here. And so for me, I think the thing that is interesting here, and one of the big stories to me has been just the absolute kind of return here of the sort of mega cap NASDAQ sort of story. And this is something we've been kind of talking about. We talked about it last week, and I think it's important to kind of to realize that in the last 2 to 3 weeks, we have seen tremendous kind of news in terms of so what some of these companies have in terms of positive catalysts. So, for example, um, you know, um, Tesla has had this big focus on the robo taxis and its AI and its robots, and there's been some interesting news on things like Alphabet. Companies like Reddit have emerged as an entirely new kind of major growth name. Amazon has had a steady trickle of news, and then there's also been Salesforce.com with its thing, this agent force. So there has been this is not just maybe momentum trend following. This is an outright sort of recognition or reaction to some of the things we've actually seen at the level of individual companies, but very important, significant sort of companies that are now kind of showing a degree of taking AI to that next level. And so I think what's interesting is if we look here at the NASDAQ 100, the NASDAQ had not really made new highs for a while. And we talked about when it was pushing higher and we were doing market trends. We talked about the state of the market on Monday. We talked about how it had that new weekly closing high above the old high. Now, when you look historically, when things like the NASDAQ break out, these can have kind of lasting momentum. And the thing is, there are potentially some real fundamental sort of catalysts behind this move we're seeing now. Like I had just mentioned, you can look into some of these. And I think it's important to realize that this is now a kind of rotation away. In some ways, the NASDAQ had really lagged, really, for this entire period after July. This was a period when financials, look at financials. Financials in this period did very well. There are other names that had done well, but especially financials. And so I think right now we're simply seeing a kind of return back to the way things were before. So look at the NASDAQ here. I want to just go through a few really important things. First I think is if we look at the individual, I'm going to just kind of zoom in on this a little. But if you really look at this on a really short-term sort of thing, and you look at, we go to our, go to drawings. I'm going to go to Fibonacci price. Sorry, Fibonacci price retracement lines. Go from that close on Tuesday to the high on Wednesday. If you look at our today, it's an inside day, you can see on the daily chart. But if you look on like a sort of 30-minute chart, you can see here that basically, I didn't draw this exactly right. Anyway, we basically held a 50% retracement. I'm going to give one more shot. I don't want to waste a lot of time messing around with this. But if you look at this here, you can see that today we came down near that 50% retracement. Wait, I'm sorry. This is the close. That was my problem. That's the close. So basically, we hit that 50% retracement and we held. So now we're holding an inside day. On the now, if you also look at these levels, sorry, look at this. Basically, the high from a few days ago back here on the 6th was pretty much where we held today. So hold the old high, hold the 50% retracement. inside day. And then on top of that, you have the fact that we've just been starting to break out. And when those breakouts just kind of start, there is that historical tendency for the momentum to continue. And I think that's kind of where we are now. And so that to me is what's interesting. And, I think in some ways, the adage for today might be something like never short a dull market. There are certainly some things that people can start to worry about, which I am going to, mention. But I did want to mention, to me, the main thing is really the NASDAQ in some ways is now we're back in the mega cap mode. We're back in this sort of time frame, or the back in this sort of mindset that the large sort of growth stocks and the overall NASDAQ index and those ETFs that follow it and the futures contracts that follow it, this is now, I think, where the focus is back in the market. So as we look overall here, there are other things to be worried about. So I'm going to use the weekly chart here, and I'm going to look at the 10-year Treasury yield, because this to me is something that people do need to realize is a potential problem. But again, it's one of these things when it's not clear when it will really become a major problem. But the fact is that there's a good chance here that we have basically made a higher low on the weekly chart, and that this kind of downtrend, this downtrend can even be drawn more like this. And we had a run up and we tried to break it the first time. Went up there in mid-November, came back down. But now, I mean, we're, potentially here making a higher low. So I think this is something here that this is, to me, this, the main kind of thing to watch when we look at risk. And now, so the thing, though, is that, the the large caps have a degree to which they are not really that vulnerable to it. The main sector, or the main part of the market that will be most vulnerable to this, will be smaller companies, the small caps. And I think that's something I want to also just kind of quickly mention here, because this, I think, is something that if this does kind of continue higher, this will be something when the market starts to worry about it. And if it does continue higher, and then we start to see weakness and signs of volatility, signs of the overall S&P breaking lower, then that's actually something which could actually signal, all right, now we have risk of a greater sort of pullback. And so I think right now, the things that could unfold are a continued upside in yield. That's an issue that could hurt, but the small caps will be the canary in the coal mine on that. And we could even see the small caps basically languish and potentially kind of break even without the NASDAQ breaking. So I think this is interesting here. This is the IWM, the Russell ETF. Look at how it basically peaked at this level. This is now turning into what looks to me like a pretty significant double top. This is like this thing that everyone and their brother has been saying, that the small caps are going to be great. And now, here we go. Lucy with the football. Look at this on the daily chart. So I hope you guys remember Peanuts. I might be showing my age, but if you go back and look at Lucy in the football with Charlie Brown, that's what the Russell's doing to us here. Look at all these solid candles. People just selling the highs. We try and rally every day. Is just rejection. So I think this is interesting just to kind of realize here that this is kind of following what we would expect. Yields inching higher. The Fed likely to be done cutting rates after next week's meeting. Inflation not as good as we would like, and the Russell not breaking out. So these things together now give me the sense that people looking for downside here, there is a lot of space in the Russell to the downside. I mean, over the summer, excuse me, this was a major, I mean, this level back here over the summer was considered a big deal when sorry. This is July. This is that breakout. I mean, look here, this thing 180. I'm sorry, let me go back to the weekly chart. So if you look at this breakout that occurred in July was like, people thought it was just an exciting thing. So, I mean, the thing is this has a lot of potential to retrace back down into these levels. So I want to just point that out, that this has space and has failed to broken out. And I've just failed to break out. And I've just noticed over time that chart tells you a lot about fundamentals. And this is telling us about the fundamentals in the Russell that is not terrific. So I think this is something we want to watch if people want to be feeling more bearish. Now, the industrials also, I think, are interesting. We talked about this, and this continues. The XLI on the weekly chart, to me, remains in a spot here, excuse me, where we do have this kind of trend line that we're kind of sitting at. And, this might be something people say, you know what, maybe not, maybe it doesn't hold. And I think one thing that's important to realize here is that basically the Inflation Reduction Act threw a great deal of stimulus at the industrial sector in the United States, the factory sector. And, um, it's not really that clear, but the Institute for Supply Management's manufacturing index, most of the manufacturing data has not been great for the last 12 months. So the thing is what if we basically, I mean, maybe we had a bunch of wasteful investment or some of it. Maybe we're too overly confident that America is about to go through this renaissance of manufacturing. And you can say whatever you want about the politics of it, but the fact is, and we talked about it in this webinar at the time, there was a vast amount of investment in factories. We talked about the construction data, the monthly construction data. It was showing 50, 60, 70% increases year over year in factory construction or investment for several months in a row back during that time. And that was when a lot of this industrial stuff really started going. And the thing is, we might want to realize this trend is long in the tooth and there's evidence that it's breaking. And the other thing is, because it was done by a single massive government stimulus bill, it is possible that some of that stimulus and some of that stuff that was done was not necessarily productive. So is there a trade in it? Well, look at the way the XLI here is just teetering. I think this is kind of interesting here. And so for what I'm kind of looking at now as a kind of thesis taking hold, the trend in the market that we talk about here on market trends is cyclicals fading, mega cap growth coming back. Cyclicals are industrials, financials, and materials, small caps, showing signs of trouble. And I think that's important to realize. Financials have been very strong, but at the same time, some of them are kind of teetering here. Now, the one that is the sickest, and we talked about it on State of the Market on Monday, is the materials. Materials here are breaking down under the 200-day moving average on the XLB. This is also like kind of what we're talking about here. This is this is a cyclical area. This is kind of potentially kind of give us that leading sort of indication. Financials here are kind of just barely trying to hold on, but we have to realize, man, this is the XLF. This thing has really been running. It's a pretty significant move. If you look on a year-to-date basis here, and I think we have to realize with the end of year coming up, I mean, financials at one point were the leading. At one point, they were the leading sector. They've faded in the last month, as you can see right here on our workspace. You go to key ETFs, we can see year-to-date they're 32%. But then you can see that basically the communications in the last month have totally taken off with a 5% gain, while financials have stalled. So I think we got to realize here that this is an area where this has run a lot, and you can say it's pulled back to the bottom of the Keltner channel, and it's all these things you can say. But I think the thing we have to realize is we're getting near the end of the year, and this might be a sector where people say this thing has kind of run a lot, and with the Fed maybe done cutting rates or anything else happening, is it cyclical? Is this where we want to be? And I think we've got to realize here that the cyclical trade, industrials, financials, are showing signs of fatigue. At the same time, money moves back to mega caps. Materials, which are people don't trade very much, but they are definitely a cyclical. Those are showing signs of struggling. The IWM has a double top, and the 10-year Treasury yield is pushing higher. So I think we put all those things together, and we see a new sort of regime or narrative that is taking shape in the market now. So as I also want to mention, we talk about the inflation. Today's PPI had this egg inflation. It's kind of crazy, but apparently there's something with chickens or not enough hens or something. But things like that don't last. And so I wonder with the inflation data, on one hand, I see stagflationary risk. I see the risk of the fact that, like I said about the factory sector, things like that, the potential that the factory sector has already been in a recession, maybe it goes from bad to worse. That is the stagflationary thing. There's been other people arguing that the employment is not as good. Today's initial jobless claims is a dramatic jump, way higher than expected. Continuing claims keep going higher. So we can start to build the narrative here of a stagflationary setup, and I think that that's there. Now, am I saying that's going to happen? No, it's a narrative that may or may not be confirmed and take effect. So that's one side of the narrative. The other side of the narrative is that, well, they're just going to grow more hens or whatever they do, and egg prices will come back down. And the thing is, if they're at $5 a dozen now, they could go back to $3, and then that suddenly turns into like a big negative on inflation. So that's one thing. But the other thing is, again, shelter, there is growing evidence that the shelter is improving. Now, the shelter reading in CPI was a high, but almost all of that came from hotels and things like that. and that kind of moves around. But the owner's equivalent rent and the rent numbers are starting to fall. And so I think that we're in a spot here where we really could see, you can paint an ugly picture, but you can also see that, some of these things structurally, are we going to keep seeing eggs shoot up in value? That's a question. Are we going to start to see the main big thing of inflation, the big enchilada, which is shelter, owner's equivalent rent, if that starts coming down? So I think right now we can paint a very bullish, well, we can paint a negative, scary picture, or we can paint a positive picture. And, we're not interested in predicting. I think it's important to recognize that you want to see these potentials that are out there, and then we want to follow, you know, when we get the confirmation of what there is. And from my view right now, the confirmation of what we're getting is essentially the momentum in large caps. But also, I think we have to realize with the Fed meeting next week, it's been a good year, and then we go into the holiday season and stuff. So we are at a spot here where there might not be a vast amount of opportunity, but the big opportunity could be for people looking for, if we do get a kind of end of year pullback or volatility or something like that. Well, I mean, maybe we get, maybe that's when people lean into the small caps, maybe to the downside. That's kind of what I'm saying. Maybe that's kind of the way people think about things. Excuse me. All right. So now I'm just gonna. I mean, I mentioned these things here. The CPI, which is this is interesting, and I think it's also important to realize. We've talked about gold at different times, and I just think it's important to realize that gold has you know, it isn't, if it wants to go lower, it's not doing a very good job of it. So I think that we're in a spot here where if, there is a stagflationary narrative trying to assert itself, there's also this ongoing global shift away from treasuries, whatever you want to call it, starting to assert itself. And so I think we have to realize that gold remains in a secular uptrend here. And so, I mean, it's interesting to me to kind of watch this and think this is also something else that might be on people's radar. It might be an environment here where rates can move higher and gold can still do well because it's based on that idea of a shift toward gold as a central bank reserve. Now, today we had some interesting news, which was basically the fiscal deficit is also, it was up 64% year over year. Now, when the economy is growing like this, that shouldn't be happening. So what happens when the economy stops growing at 3+%? I mean, if you look at the fiscal situation, there's definitely things in that to be worried about as well. But again, it's one of these things that's been out there. But I want to mention that today we do have a certain sense of that, and we're seeing those yields move higher. So that is something that is there. Now, the other thing is that the European Central Bank, is cutting rates and that whole thing. But I want to just kind of mention that there is that sort of potential for something like gold to be an interesting asset because China bought a bunch more gold this week or last month. And so it's not necessarily going away. So I want to keep it on people's radar. Now, I wanted to look at some individual things here. Let me just see. Also, I got to say, there's a lot of people using the S word, and I mean seven, as in 7,000 on the S&P. And this is now becoming the new normal. 7,000 is the new 6,000. Everyone's so confident we're going to hit 7,000 next year again. A little bit of something that is like just something to be aware of. And Jeffries is saying, "Oh, of course, yeah, of course the Russell's going to break out. Why wouldn't it? Of course it will." Again, these are the sort of things that sometimes you got to also just kind of be aware of that. There is a degree of confidence in this, and that does also create the potential for if things start to crumble. There's a lot of kind of quasi complacency here. It's not like it's totally run that far. The VIX has not stayed low for a long time. And when I usually look at the historical cycles, I would look for the VIX to stay low for months before we really get, complacent and get to the spot when things can really break lower. But I think it's also important to realize coming up on the holidays, the Fed meeting and stuff like that, it puts us in that spot where we could, kind of just hit a dead zone and then the volatility kind of steps in after the Fed. Now, in terms of other things I wanted to mention, all right, let's just look at some individual things that were popping up for me. I want to just mention here Pepsi, not a stock we look at a lot, but look at it on the weekly here. It's trying to just hold some really long-term sort of levels. And this might be something people watch for potential breakdown. It might be something people want to set some price alerts on to see if it does kind of break down through these kind of long-term support. That was the first one that popped up to me. Another one that popped up, which is on the as a potentially sort of upward direction, is HPE, Hewlett Packard Enterprise. Had this strong earnings report, rallied, pulled back to hold the rising 21-day exponential moving average. Now remember, these are things we find using our MA tools grid here in our workspace. The workspace is available if you go to this download right here and you install the indicators in your TradeStation platform, and then you use the workspace. So I wanted to mention that's where I got all of these. I'm not going to go through doing it right now because I don't have that much time, but I wanted to show you that's how I found that one. Earlier today, I was going through and using the workspace. Also interesting to me, look at a name like Airbnb. Airbnb here has been just kind of grinding higher. And, a lot of these, if you look at this with like, you can kind of see here, I just wanted to mention this is the one to me that people might want to be thinking about. Can it close up above 141? I think that's kind of more the question. Just to kind of watch here because it's in this kind of tight range, and it had a strong earnings report in here somewhere that I think it was here. So anyway, I'm not sure exactly where it was, but they had the last earnings report kind of surprised, and it's in this kind of tight range where it was in a downtrend. But now what do we have? We have it's above the 50-day simple, it's above the 21-day exponential, and it has spent some time now getting back above like the 100 days. So you could say in some ways that this period of crashing is potentially ending, and people might want to just see if it can get above this recent high. Another one that jumped out to me in a similar sort of setup was CrowdStrike. Now, CrowdStrike had that whole incident. When was that? Back in July, but also very tight range near this 21-day exponential moving average. And we have a little bit of a line on this one that people might want to kind of, sorry, like this. Let's see if anything happens around that line. All right, now Arista Networks, another one that is just holding above these highs. It's interesting, this was one that I really thought of talking about back here. And I'm not just saying that like, oh, I knew it, but this was another one that Keltner pulled back. It found it for me. It had a good earnings. It just ground down. It made a recent high. I'm trying to remember. It was either, I do this one scan. If you look here, we have this tool. It shows you like, ANET or Apple days since 52-week high. So what I do is I do a scan here. Wait a sec. Other one is that's on price grid. So if you do like, ANET, it tells you how many days since it made a 52-week high. This is one of the tools I give you guys. So basically, if you go in there, you can say, hey, I want to see stocks that made a 52-week high in the last 21 sessions. And then also those stocks that are down at the bottom of the Keltner channel. So I did one of those scans on this one, and I remember seeing it down here, and I was looking at it, and I didn't do anything with it in terms of writing a trading view idea or anything. But I want to mention that because this was one that it made a high, and it pulled all the way down the Keltner channel, and it came back up. Now here it is kind of trying to hold above the old high here. And I think this is also just kind of interesting that this is one of these sort of names now where it's in tech, it has an AI angle, but it's not a $1 trillion company. It's in that sort of spot where people looking say, what is going to maybe, outperform if we remain in this kind of AI tech market? People are looking kind of down in market cap to some of those names that might have that potential for bigger growth. So that was one that jumped out to me. Now to the downside, I was talking about the financials, but in particular, JP Morgan looks like it's hanging on kind of by a thread here. And like I said, these names, it has this gap here. So I want to kind of point this out. The 8-day exponential is just coming down near that 21-day. I wanted to mention this because to me, like I said, it's interesting. Look at that shooting star. That's a confirmation of a shooting star reversal pattern if I ever saw one. Have the shooting star, then we close below it, we sit, and we just keep making lows below it. Look at this. Again, it looks like the Russell, solid, solid, solid. People selling those opens, dry, and then just no buyers. Buyers are not showing up. They show up at the open, market order, market order open, boom, and then smash down when the day moves on. So this is also something I think is interesting. If people are looking for the downside, these financials here, like I said, the cyclicals here, there could be some give back in this sort of cyclical, optimism. City also, I mean, it's interesting to look at this. I mean, this is one where we have this rising trend line. I mean, this could be one where it breaks that trend line, and then there's a gap to maybe say, hey, let's go down and let's go back to 67, 68. Maybe this is the sort of thing that a name like this, it has a lot of options. So I'm just pointing these out. These are the sort of names with options and with put spreads and things like that. There are potential opportunities. Wells Fargo is another one. We mentioned last week as a potential sort of thing that looked like it was holding and it bounced for like a day or two and it's just bled lower since. Again, just no conviction. No one's sticking around. They try and buy it and then that's it. This is also the sort of thing that, I mean, look at these solid candles. This is just showing that people are not chasing that. They're not honoring that early strength. They're selling it. Now, Merck, you know, this is a potential bearish flag in Merck. I want to mention, these big pharma names have been trouble. We did a trading view idea recently on Eli Lilly. Look, today we have a death cross in Eli Lilly. Do you know that Eli Lilly, depending, I don't know where it is exactly this moment, but it was the number 4 S&P stock in the last 5 years. It was behind only Nvidia, like I remember Palantir, which only joined recently. So Eli Lilly has been on a monster run for a long time. And, here we have this death cross, gap lower. You can see how it's, these support levels here, these lows, it's holding below it. This is a stock I want to just mention. There's people worried about, healthcare and everything else, whatever it is. I just want to mention the fact that this chart has run a lot, and now we're getting a potentially significant reversal pattern with that 50-day having that death cross below. The home builders, also ITB. I mean, this to me, and I kind of said it before, and now other people are catching on. I can't remember who it was. One of the analysts recently downgraded home builders, saying what I said several months ago, that these guys are basically paying people to buy their houses. They're throwing incentives at them. They basically remind me of what General Motors was like before it went bankrupt. It's not to say they're going to go bankrupt, but the fact is, when you need to cut prices to move product, which is what they've been doing, they haven't been cutting prices. They've been buying down mortgages and doing all these other things because they're trying to prop up the prices. That's why companies do rebates. That's why automakers do rebates. They don't want to knock that retail price down. So they're going to basically put one number out there, and then they're going to give you a bunch of reasons to knock it down, and then they keep that. That's what the home builders have been doing. They've been hiding this for a long time. But if you've been reading those earnings reports like we do for the last 2 quarters, they've been incentive. And now Wall Street's noticing. Look at this breakdown in the ITB here. I got to just mention this. This was boom. This was when that guy, can't remember his name, the Trump guy got to the nomination of Treasury and Bessent when he nominated, is it Scott Bessent? Anyway, the market likes Bessent. They think he's not going to blow up the Treasury market, which is good. But that was just a fake rally in the home builders, and it's been just a steady bleed lower since. This is another one I think we got to kind of watch. People looking for downside here. This is one that this could have space down back into double digits. It's back down toward kind of 98. People might see this level here. I mean, that was a significant level over here because it was this level all the way back in January. January it bounced there in July. So I mean, this might be something people look for in the ITB. There's various home builders that follow this one pretty closely. I mentioned the double cap and Russell, the double top. I want to mention Micron here. I mean, people might see this as a potential bearish flag. It looks a little bit like AMD did before it started breaking lower. Look how AMD had this flag. Micron is showing a similar kind of potential pattern. All right, those are the main things I wanted to cover. We are at the 2:30 mark, so it's great talking to everyone. Remember, we will be doing State of the Market on Monday. This is the link right here. If you can't see it's a link, but it is. If you click on that, go to that. That's our State of the Market for Monday. Hope you guys, let me actually hide myself so you can see that. But great to talk to everyone. Hope to see you on Monday and have a great weekend. Don't forget about next week. We have really last quick reminder. We have retail sales on Tuesday and the FOMC on Wednesday. So see you guys next week. Have a good one.